Hope you're doing well today. It's Tuesday, the 3rd of August, and I just wanted to pop in, give you guys a quick update on what's happening this week, run through what our numbers are, what we're looking at today, and I wanted to recap where we finished up July using that BTX method. I did record a video for the BTX subscribers, and that was done on Friday at the end of the week, but we can get one out today as well for you guys just to see, so that you can see how a very simple method with no bells and whistles can work as long as you work the method, right? So let's go ahead and jump into it. We're gonna pop over here first. What's happening this week? I didn't run through this yesterday, but I just want to reiterate, every day when you come into the marketplace, you should be aware of what news events are occurring and what impact those news events could potentially have on your trading day. There are some major ones, like FOMC, for example, is very impactful. We talked about that last week. Markets typically go flat leading up to that and then can react during or following it, depending on what comes out from those announcements. Non-farm payroll is a big one. Housing, big precursor to the health of the market. There are others that aren't as impactful, but I think it's important to look at those, look at history to see how they've impacted the market, how the markets have moved, and then you can make a determination as to what you want to do around that news, whether you want to stay in, if you want to reduce positions around news, or just simply stay out altogether and not take positions until after the news event has occurred. I think it depends on the news event, depends on your own risk tolerance, but it's important to know what's going on and what's happening there in the marketplace. So anyway, with that said, today, not a whole lot going on, a lot of low impact news here for the US, but there is stuff later in the week that we should be aware of. Tomorrow, so this is non-farm payroll week. Friday is non-farm payroll. It's one of the biggest, most widely watched news announcements that are out there, because it tells us if people are working or if they're not working, and that from that you can kind of infer as to what that might do to the money presses that have been printing nonstop, and inflationary pressures and so on and so forth. There's a lot that can be inferred from what comes out of non-farm payroll. But anyway, tomorrow is the precursor to that, which is the ADP non-farm employment change report. And then Thursday, not really a whole lot going on here in the US. Friday, though, as I mentioned, non-farm payroll and the unemployment rate. So big stuff coming up later this week. Just be aware of it, so that you can make your decisions around what you want to do, whether you want to trade following those announcements, or if you want to sit on your hands and let the market figure out what its direction is, in the days following it. So just think that through. You've got to have a plan for what you're going to do with news. So with that said, speaking of the plan, the BTX method is a very simple plan that you can follow, that gives you quantifiable reasons for why you're in the market, what you're doing in the market. If you're in, if you're out, if you're on the sideline, when to take profit, everything. It works it all through for you. Is it overly simple? Yeah, maybe. It's a super simple plan. But I've found over time, simple plans work because people typically stick to them. The more complex something becomes, the more subjective it tends to become, and the less likely a person is to have consistency or actually stick to it consistently. So this is a great spot to start. Is it the end all be all? Absolutely not. There's a lot of other things that you can do out there for trading, but I feel like this is a great spot to start to help you get your footing, get consistently. And if you never want to change from it, it gets you consistently profitable over the long term, which is what it's all about, right? So what happened yesterday? Let's talk about yesterday and today, and then I'll end by recapping what we did in July. Okay, so yesterday we talked about the S&P was the only one that we had to trade because the other two were in mixed biases. We were looking for long trading opportunities on the S&P, which means that we wanted to see the market pull back like it was doing here, making lower highs and lower lows, lower highs and lower lows. And then we wanted to see it break back in the direction of its market trend, which was long. So it did. It pulled back here, lower highs, lower lows, lower highs, lower lows. got down to this, 43.85, 43.86 area. It did start to break back up, put us into the market here at 43.93, and then just didn't go anywhere. We are trailing our stop. I like to take off risk as the market moves, as new bars form. And so taking off some risk here, we ended up with a little worse than break even, just a little below break even trade here. So ultimately, this one started the month off with a very small loss for us. We can see our entry was here, our exit was here. It's an interesting spot we're in. We talked about this, last week. Look at the channel this has been in. I mean, this has been in a really, really tight channel. So, looking outside of BTX, right? Because what we still want to do, let's talk about that real fast. Today, we can see that we've got a mixed bias. The 30-minute bias is short, the 4-hour bias is long. So we have a mixed bias here. So that's saying, hey, don't trade the S&P. We've got mixed bias here on the crude, and we've got mixed bias here on gold as well. So all of these, we're in a position right now where we're just going to be sitting on our hands. Now, with that said, coming back to the S&P, look at this channel we've been in. We've been in a really tight channel. It's been flat since the 23rd of July back here. We seem to be hitting kind of a top edge, around this 4,400, 4,405, so that area here, and our bottom edge, as we've talked about numerous times before, is this 4,375 down to maybe 4,370 area is our bottom edge. So, if you're watching this and you're looking at opportunities outside of BTX and you just want something really simple, park yourself a buy order up here at, just above 4,400, maybe 4,402, 4,403, look at buy. If you really want to go a little bit more, what's the word I'm looking for? Anyway, I'd say 4,404, 4,403, look at your buy area up here, and then you can look for sells down here, 4,375, and, just basically bracket your orders in. And if the market really gets some momentum and breaks through and moves, you've got opportunity to participate in the market on the short side. If it breaks up here and moves, with some momentum, you've got some opportunity up here to the long side. So if you're looking, for something, because right now we're just sitting on our hands. There's nothing happening. All of these are no trade, no trade, no trade. But this is an amazing channel. I mean, I don't think it gets much clearer than that, and as a channel. And certainly look for some breakout opportunities there if you're watching or want something outside of the BTX method. Now, again, with that said, you really don't have to. I mean, the safest thing is just to sit on your hands and let the market find its trend and then trade in the direction of that trend, because ultimately we want to go for a ride on the train. We don't want to keep stepping in front of the train, because the train won't stop. It'll run you over. But as I mentioned, there are opportunities outside of that, and markets don't stay in channels forever. It's going to move. It is at some point, I don't know when, no one knows when. It might wait until Friday with non-farm payroll. Who knows? It might have a blip today. I don't know. No one knows when it's going to move, but it won't stay in this channel forever. It will move out of that channel. We just don't know when, and we don't know what direction. So a great way to trade that is to set breakout points and allow the market to come to you. And if it stays in the channel, it stays in the channel. So but if it doesn't, you've got them out there, and you're prepared for when it starts to break. If you're more conservative, you can certainly look outside of this, really get down here to 43.70, and you could go up here, to these higher levels around 44.15. So, conservative side, 43.70 on your shorts, 44.15 to go long to break the channels. I'd be a little more aggressive than that. I really would look down here, 44.04, 44.03 area, and then 43.75 on the short side. But anyway, those are your opportunities. What did BTX do over the course of July? Actually, just like always. Well, that's not really true. June was our first losing month, but July, again, on a $10,000 account, if you took every trade that popped up, you would have ended about 4.5% on your account. If you guys had watched FOMC, I mentioned last week, FOMC, don't trade, because we don't know what's going to come out of that. The market's typically mixed during the period that we're trading in the mornings, so don't trade. If you followed that advice, you would have ended around almost 8% potential there on a $10,000 account, trading exactly as we are here on this method. You don't win every trade, but we do want to let the trades move, and we want to be able to have wins that are greater than our losses. And that's just gives ourselves simple mathematical advantage and a positive expectancy over the long term, and that's what it's all about. So I'm going to leave it here. Trade with the market's telling you, trade safe. I gave you a breakout trading opportunity, but if you're just trading the method that we talk about here, you're sitting on your hands. That's a big piece of trading, is knowing when not to trade. And there are going to be periods when you don't trade and you've got to sit on your hands, and that's really hard. It's hard for me. I don't know if it's hard for everybody, but sometimes that's really hard. When you see the market move and you see opportunities, it's hard to just sit on your hands. So, there are other things that you can implement, like a very simple breakout method that I just talked about. So if the market does get some momentum, it does move, you can take advantage and be part of that, not have that fear of missing out or that anxiety of missing out that forces you into some trades or chasing trades, things of that nature. It's very important to be able to plan things out and have a subjective or have a quantifiable reason for being in things, not entering the subjectivity as the market's moving, which clouds our judgment and forces us to make some bad decisions, right? So anyway, that's it for now. You guys have a great day. We'll come back tomorrow. We'll talk about what happened and how things went. All right.